Today we have the honor to speak with Julian Sawyer, the CEO of Bitstamp, one of the oldest exchanges in crypto space. He joined Bitstamp in October of 2020, coming from Gemini, where he was the managing director for Europe. Mr. Sawyer, welcome and thanks so much for your time.
That's a pleasure. Thank you for inviting me today.
What did your first 200 days at Bitstamp look like? Would you be so kind and give our audience a brief background about you and your career?
Yeah, of course. I think my career probably goes into three distinct chunks or phases. The first time, probably for about 20 years, I was a management consultant. I kind of joke that means I'm very good at PowerPoint. And then I made a decision to join a startup bank in the UK, Starling Bank, where I was the co-founder and chief operating officer. And so for an amazing 4.5 years working across the organization, really just understanding what it is to start a bank, and the excitement within the fintech world is just, amazing. And there's a lot of passion there. And then I had the opportunity to move into crypto. And I think what is really interesting is that what we're seeing with crypto now is it is moving a lot closer to traditional financial services. And so you have the likes of myself coming in from financial services, coming into the world of crypto. And that creates a whole different dynamic. It creates a different conversation that we can have with the regulators, and also in terms of policymakers across the European Union and beyond. So for me, the opportunity of joining Bitstamp was just amazing. The world's oldest exchange, fantastic bunch of people that are doing some great things. But I think it's about the quality that is important. We know that crypto has a lot of different players, a lot of different actors across the ecosystem. And to have the opportunity of joining the best is just brilliant. So delighted to join as global CEO. What do my first few days look like? In a normal business, in a normal world, I would go into the office. I would go into my office in Ljubljana, and I would be sitting there and meeting people and getting to know them. We have this challenge with COVID and remote working, which has been, incredibly difficult for everybody across the world, without a doubt. And for me, the team has been absolutely superb in welcoming me, but also engaging across Zoom. So I will be in Slovenia towards the end of June, and looking forward to that. And meeting people in real life, which is going to be kind of unusual when I've just seen the top off of their bodies, no idea how tall they are, no idea anything really about them as people. So really looking forward to engaging with the wider team.
How different was it coming to Bitstamp compared to, for example, Gemini? Of course, you're in a different role, but
yeah, I mean, I think, Gemini is a US-centric exchange, and my role there was to open up into Europe. My role at Bitstamp is fundamentally different, as you say. Being the global CEO of regulated entities in New York, in Luxembourg, as well as in Singapore, means you're running a global product 24/7 with teams across multiple offices, both within Slovenia, Luxembourg, people in the UK, New York, well, actually America. We have colleagues all over America and also Singapore. So we're building out our global presence for a global product. And I think our ambition and mindset is, right at the top of the industry. Super exciting to be in that space. And I think if you look at the ways of working, one of the passions I mentioned earlier was fintech, financial technologies, doing things with tech. That is what we are about, and we are an organization that is leading in terms of our technology capability, but also ensuring that we've got product and product market fit in our respective markets. And I think one of the challenges that our industry has got is there's a lot of hype. There's a lot of trendy things you should be doing or not doing, etc. And what we're trying to do is to plot the path through the noise to where we think the market is, and ensure that we are providing our customers with the trust in terms of the exchange, in terms of the security, but also the products we're marketing, i.e. the digital assets. And I think that becomes really important as time goes on within our industry in terms of that trust element is key.
One more personal question before we dive into the business side of everything. What made you personally pivot towards the crypto space? I presume it was back in the days of Bitcoin only era, right?
I think what is interesting is when I moved into challenger banks and starting a new bank, everybody said, you're crazy. No one starts banks. This was 2015. No one starts banks. A bank only on a mobile phone, that's crazy. People like branches, they like contact centers, they like infrastructure, etc. And what we're seeing in that market is a fundamental acceptance of this is the new way of working. And a challenge that has often been put in, well, that's fine, but it's only for the young people, it's for the millennials, they'll use it. But the people who actually borrow money from banks tend to be those slightly older, looking for housing and things like that. And that's where you make money. That is wrong. What is important is if you live your life on a mobile phone, you can be any age. I'm not a millennial, but I live my life on a mobile phone. And so actually what that product is about leading the next generation of banking. And for me, the same passion is in crypto. And what we're seeing is a couple of really interesting trends, and I'm sure we'll touch on this later on today. But I think we're seeing the first thing, which is what I mentioned earlier, which is the crypto industry is coming up towards financial services. So we're getting a really nice sweet spot where we've got financial services or traditional financial services players and institutions thinking about what does crypto look like in their business model. You've got regulators saying, we want to be in this, we need to understand the risks and controls and what are we doing. And you've got what I would call the more grown up crypto exchanges like Bitstamp ensuring that we are absolutely there. So for us, compliance, risk management, control, etc., are really, really critical in terms of what that means and the credibility within the financial services space. And yes, there are people in the crypto industry that is kind of at that end of the spectrum, and we are not wanting to be there for very good, sound reasons. So I think that is one part that is, super interesting. The other piece is, I think, what we've seen in the last, 12 months or 18 months, whatever you want to call that, is that pivot in terms of the conversation. So the conversation used to be with people who were in the industry that liked crypto, who had bought some Bitcoin, and you were talking to each other, okay? And then all of a sudden, I say 12, 18 months ago, you started having conversations with your friends, with your partner, talking about Bitcoin. They go, well, I don't really understand it, but I keep on hearing about it. What should I do? Should I be using this? What's Ethereum? How does this work? And that becomes super important. So we got this moment where we've moved out from that early adopters and innovator stage into that mass market, into the point where people are having a conversation and people are trying with us. They're putting in 50 euros, 100 euros. They're having a conversation in terms of what do they want from this as a type of asset class, or they're trading, or they're using it for doing payments, etc. So for me, it goes back to the same as the Challenger Bank, which is that leading edge of like, this is a pivotal moment in terms of the technology, the financial services, the regulator, the ensuring that the trust and resilience and security is there. This is the time to join the world of crypto.
And what was your personal initial moment where you thought about crypto as the possible new stage of your career?
I would say it's probably about a couple of years ago, when starting to look, beyond banking and what do you do. And I think there's a point that said, well, you created a very successful bank in the UK. Do you go and do it somewhere else? And it's like, well, I've done that.
Okay.
I've learned how to do it. It's really exciting, really, really passionate about what the guys at Starling are doing. But it's like, okay, so what next? And I think for me, and I guess for any leader, it is taking all of that knowledge that you've got over the years and trying to ensure you, in terms of culture, in terms of product market fit, in terms of how to execute and how to go to market and how to communicate in the market and how to market your services. These are all things that come from the same playbook effectively in terms of what we can do. So I think the excitement and passion, which hopefully you can see, but the excitement and passion that I've got in terms of financial technology, of which crypto is part of that. And so my language that I'm using both internally with the team and externally is, we're a financial services company doing crypto. Okay? If we continue to use that conversation, that is a very, very interesting because if you look at the connotations of that, that is regulation, security. I've spoken about trust three times already today, but it's all of those things which you have in relation to how do you look after your money. And when you think about where your salary goes into, where your savings are, they're in trusted in institutions, and then you decide what you're going to do with your investments and whether you're going to be risk averse or very risky, etc. And you will play within that space. And we think, and I think, that cryptocurrencies have a role within that space as well, and that's going into the mainstream.
Before we dive into each of those subtopics, I believe you have recently rounded up the first quarter of 2021 business results, right?
Yes.
What were they like, and what do you make of them?
So the results were very exciting for two reasons, and I think one of the things that is interesting is obviously we're in a bull run at the moment, and so therefore if you're in crypto, then you're going to be making money, and if you're not making money in a bull run, then you should really just go home and do something else. So for us, it was really good. The bit
how strong or soft were the numbers compared to other crypto exchanges, for example?
I think, I mean, some of our numbers we don't disclose on a public basis. I know some of the other exchanges also don't. But in terms of, market share, in terms of growth, in terms of profitability, the numbers were all in the right direction. And I'll give you one sort of an anecdote to this. So in Q4, we did our 2021 budget, as you do. By the end of March, we'd made our 2021 budget. So pre-bull run, we were running much, much faster than we can. But I think what is interesting here is you need to take away all the bull run noise, hype, business, and look at the fundamentals within that. And the fundamentals are in terms of new customers coming on board, customers engaging with us, customers coming from different jurisdictions, from different social demographics. We're seeing a lot of customers coming new into crypto rather than just somebody coming from a different exchange into us. We're also seeing that people are liking some of the newer products that we are offering in terms of new assets that are being listed. We've just launched Ethereum staking. That becomes really important. And so there's a number of things that you've got to unpack from the headline number to then go, actually, we're seeing some really interesting behavioral points. As an example, we monitor how people coming onto our app and our website who trade and don't trade. So a lot of people will come on a daily basis to look at what the prices are. They not going to change their portfolio. They've invested or they've got cash with us, etc. But what is interesting is that trend of people being more engaged. And I think that becomes interesting, that people are using our product as a way on a daily basis to look at the pricing, look at their investments. I don't know about you, but my pension, I can't remember the last time I went onto the website to see what my pension valuation. It was probably far too depressing anyway if I did. But it's that level of engagement. So it's not at that long-term investment thing. It is people are really looking at that. So for us, what we're really passionate about is looking at things in a different way than what you would normally do. So yes, the P&L is super important, and we look at that and the investors, etc. But what is also important is those little metrics. Okay, these number of people are coming in to our channels. These are then doing something with that. These are people who've been active for 30 days or 60 days, and understanding those metrics. And all of that is around engagement, to how engaged are they in the products that we're doing. And that's on the consumer side. On the institutional side, literally, I was listening to a podcast from a US colleague, and they were going, the phone is ringing. The phone is just, hot in terms of people wanting to have conversations. And I think that is really important that in the institutional, family offices or banks, etc., are saying, okay, we need to start understanding this, or we need to know who our partners are in terms of that. The other area that is getting a shot of life, and I think it's a combined effect of COVID and the bull run, and I'll explain in a moment why I think it's there, is the partnership model. And this is where somebody who has got perhaps an app or a website who then needs to or wants to service their customers with crypto, they will come to us and they use our crypto as a service. So that's a set of APIs which would enable them to present prices and to be able to hold the assets for them. And that is a really, really interesting point, because if you think about some of the fintech companies out there, and Europe is by far the leading globally in terms of financial technologies and apps. We get bombarded every day on them. It is to ensure that what we can do is help them provide their customers with crypto assets, and I think that becomes interesting. So why is that a COVID thing and also a bull run? Bull run, yes, there's more people talking about it, there's more interest, there's excitement. So that's a kind of a tick in a box. The second one, which I think is happening with COVID, a lot of the fintechs in Europe were not making money. A lot of them were saying, well, we just got to grow. We've got to grow through the curve and we get to a certain point. And then COVID happened and investors were going, not sure what's happening. Funding, I didn't say dried up, but I think some of the investors were a little bit more picky on who they wanted to invest with. And obviously the successful companies were raising still and done some credible stuff, but other people were starting. And then you started hearing something Q1, Q2 last year, which was really interesting, which was the P word, profit. Up until now, fintechs didn't talk about profit. They talked about customer acquisition numbers and growth and balances and all those other things. And then they started talking about profitability. And clearly, if you've got assets that are like crypto that they could then partner with and provide additional services, that is additional income streams to the fintech. So we're seeing a lot of interest with people going, actually, I've got customers here. How do I provide that service? Because if I don't provide it, they will go somewhere else. They may still come to us, which we hope they do, but it's about empowering those customers with a wider set of products, of which digital assets is one of those.
What are the territorial expansion plans in store for Bitstamp? I believe you're in the midst of a major push into the US market, right?
Yes. So we've been in the US for many years. I think it's about 25% of our revenue comes out of the US already. What we've been doing over the last couple of years is a big investment in the regulatory and compliance work. So we've got a bit license in New York with the Department of Financial Services there. We've got money transmission licenses in the vast majority of states across there, which means that we've got that infrastructure, that compliance infrastructure, which is super important. So we have that. We're regulated in Luxembourg with the CSSF in terms of the European Union side. And we're applying, as a number of other people are, with the MAS in Singapore. So for us, we've got those three centers of regulatory backbone or foundations, etc. So for us, it will be about using those platforms to look and develop from a global perspective. So I think I mentioned earlier that we've got a global product. We need to be servicing customers 24/7. So we don't have these things called bank holidays. We don't close at 5 o'clock and open at 9 like banks or traditional financial services. So we need to be able to, and you can say it's following the sun or whatever we want to do. But Singapore, New York, Luxembourg as the regulated entities is where we need to get to. What I think is interesting is if we just look in Europe and with one particular regulation, the Fifth Money Laundering Directive, which embodies crypto exchanges. What is important and what we found is that different countries have implemented that slightly differently.
Yeah.
And so the rules and the interpretation is different, and that's that is a pain. It's a shame because the single market is so important, so powerful, and now we're saying actually the way that one jurisdiction is doing it is differently. What we absolutely hope is that will become a level playing field where the best practice, whoever's got the best practice across their implementation, is done that. That is really important. what we also need to do clearly is look at the big economic areas where there is high growth. So, obviously the UK post-Brexit is super important to us, but obviously Norway, Switzerland within Europe, and across the globe. So what we have is these centres of regulatory stability. That also means that we spend a lot of time with our banks to ensure that we've got banking rails to be able to bring fiat into the ecosystem and get fiat back out. So that is not a trivial exercise to do. And it is about then ensuring that we're operating that at a global basis. So, for instance, our product and our systems are a global exchange. Our product is a global product. And so, yes, we can ring fence it or geo fence it in terms of, well, this product is not allowed in some jurisdictions, or we don't want to wait for the slowest jurisdiction before we go live. How can we go live in one jurisdiction and catch up with the other? But we are global. And that is really important, that we're not going to build local capabilities. So that does mean that we can go into newer markets, assuming we have regulatory and we have the banking rails. It enables us to then say we can go into, because we have a product that is global. So for us, our heartland is Europe, without a doubt, and has been for the last 10 years, and our brand and market share is superb. US is our growth area, where we're investing a lot of time, a lot of money in terms of growing that, and we're working with the MAS in Singapore to nourish that. So we've got 5 or 7 people in Singapore doing some great stuff in terms of our product, our license, and our business development. But once we get the license, we'll then be able to pivot that, as the US has done.
In terms of competition, where are you now, and where you aim it to Bitstamp to be in 5 years' time? In what way, for example, is Bitstamp better than Binance, for example?
So I'll separate those two things in, because they're very, very good.
Okay.
The reason I started to smile when you talked about competition is like, so who are our competitors? Okay, so there's a number of exchanges that do things very similar to us, and we all know who they are. But actually, isn't our competition N26, Robinhood, Venmo, PayPal, challenger banks, other fintechs? And I think what's important is that we need to be very clear on our role within that ecosystem. And before you ask what our role is, we're working on that, and we're doing a large piece of work up to the summer on understanding what that role that we do, and hopefully we'll be able to speak in the autumn time, and we'll be able to share a little bit more of that if you'd like. So for me, I think competition should not be narrow about, here is a company that's something very similar to you. Okay, what are we doing? Okay, so we are, one part, we are a retail simple app or website that enables you to buy cryptocurrency. Great. So that competes against a whole range of other people that cryptocurrency is part of their portfolio or is their portfolio. You've then got a group of people who are, you could call them active traders, you could call them pro-consumers. They're people who trade or use an awful lot and probably are on the website or app many times a day doing things. That requires a certain product market fit, which we're very, very strong on and always have been strong in that space. You've got partnerships, you've then got institutions. So actually your competition changes against all of those 4 or 5 different segments. It depends on who you want to do. So we're working through that right now. And I think that is super important that we're clear. A 5-year challenge is a good one. I think CEO should know what their 5-year, what I call the North Star, where we're going. We know in the world of crypto that 5 years is a lifetime. So yes, we will have that, but also we need to be looking at 1, 2, and 3 years, ensuring that we're very clear on those steps, because some of these things take a long time. I mentioned that in the last probably couple of years or so, we've been investing in the US in terms of our compliance structures. Okay, that was 2 years of hard work, ensuring that we are meeting the state-by-state requirements. It's not something you can just go, I just want to go into America and we launch. It takes time. Also the same in Singapore. We spent a lot of time in Europe. we spend an awful lot of time in Europe just trying to ensure that we are working with the regulators, we have the right payment rails, etc., to ensure that we've got that resilience and security which you want. I think I'm not going to talk about a particular exchange. I know you mentioned Binance. I think for me, I'd like to talk a little bit about what the principles are that is important. I mentioned earlier that this collision of crypto and financial services coming together. So regulation is key. And I think as regulators see the size of an opportunity or a problem, and also once they understand the technicalities of a particular area, then they spend more time looking at it and putting the controls in place. And that is absolutely right. And we fully support that process. What we're seeing in crypto, and 5MLD I mentioned earlier is a really good example of that. What we're seeing is they're coming and understanding what the regulatory risks are with crypto exchanges, with crypto, etc. And that's from a money laundering, a know your customer, know your transaction, a whole range of things. So for us to enable our institutional partners, for instance, to have that comfort, they will need to be in a world that the regulator it also is in the same world, because they're not going to do something. A big bank is not going to do something with us if they do not have that comfort about the regulatory status and permissions and controls that we've got in. So for me,
they need to have all the boxes ticked, right?
Absolutely,
yeah.
Absolutely. And 4 out of 5 boxes is not enough. It has to be all 5 has to be ticked well and truly. And a lot of in these traditional organizations, it's easier to say no than it is to say yes. And what we need to do is give them enough assurance that they all say, yes, we've got all 5 things ticked and we're going to see absolutely right for that. So that becomes really important. So we think that regulation, and therefore the activities that we need to do from a compliance and from a risk, is a differentiator. Now, there are a number of exchanges very similar to us, and there's a number of exchanges that aren't. We think that there will be a flight of activity, trading, going from those to those. I think this is therefore about education. It's about ensuring that we have educated people as to where they would go. If I said, could you just give me your salary, I'll keep it, and whenever you want it, you come to me and I'll give you, hand the money out to you, you wouldn't do that. You would not do that. You'd go to a bank. A bank has got a safe. It has gold. It has bars. It has security people. You don't do things, and we need to educate people about what is the right piece. I think the other piece that I think is super important is effectively around the trust of the assets that we're selling. So how resilient are they? How liquid are they? How grown up, mature are they? Have they been stress tested? Are there some rules in the scheme that is just like does not make sense or isn't fair to people, etc.? Have we understood everything? And there's loads of examples where people have put money in and has not resulted in success for them. And so for us, this is not a race for quantity. This is a race to quality. And therefore, we are not going to list every single asset. There's 7,500 assets, if I remember correctly. We have a relatively small proportion of those, but they're good. And what we don't want to be is the exchange that is giving you access to 100 tokens, and then you just go, well, that one's just crashed. That one doesn't work. That one could be a scam. That one has regulatory risks, etc. So we think this is about quality, not quantity, and ensuring that people understand that. And I think if you look across the other exchanges that are listing more assets, it's still heavily dominated by the top 3, the top 5, the top 10, however you want to categorize it. And so there's a very thin tail at the end, which creates a lot of noise, but actually isn't material to consumers. And I think that education, not only over what is important and what does a good exchange look like, but it's also about, so what do these assets do, and do you really understand them? Okay. And we know that when we go into an investment advisor and they look at you and they go, you don't understand stocks or shares or bonds or something like that, but this other person does because they're more had more experience in that. They're not going to sell you things that you are not experienced about or can understand or can coordinate how that fits into your portfolio, and that becomes super important. So I think this is about being grown up. Okay, this is a little bit more mature, not racing after the latest hype or fad, and ensuring that we're building that stability exchange with a set of products that people actually want.
In the past, there have been people who have complained and even stopped using Bitstamp services due to high fees compared to competition. How are you fighting this?
I would say it goes back to almost the same answer that we've just done, which is, it's about being fair and being open and being transparent. So let me give you an example. Robinhood and there's various other free trade apps in Europe, but obviously they're probably the famous one, is free. Is it? Is it free? It doesn't cost me anything to buy a Walmart share or an Amazon share, but it's not free because of the spread. Okay. What we believe in is having transparency in the fees. Okay. And while some people may, on their particular trading patterns, may go and find somewhere else, is that safe, secure, etc. Now, what is super interesting is if you look at our uptime this year, we are the best or one of the best in terms of our uptime. Okay. So when the market is highly volatile and you want to sell or buy, the only thing you want is the service available. Now, you can have these free services and they have outages. You look at all the top 5 exchanges. I was looking at some stats from last week. Of all the 5 top exchanges, we were the only one with no outage that day. Okay.
Yeah, I wanted to ask you about this newest 50 or so % market crash. We have all seen reports of users' outrage about the outages of the major exchanges, which of course meant people were unable to make important trades.
Yes.
How did Bitstamp fare through all this?
Very well, very, very strong. And I haven't seen all of the...
So no outage?
Across all of the exchanges, but we are up there. As I say, the stats I saw from last week where we were the only exchange out of the top 5 that had no outages. That is super important, okay? It's really important that you can have that assurance that when you want to trade, when you want to do something, that your assets are there in our custodian and they're available and you can do things with that. And that is really, really important. And I'm almost surprised that more people are not speaking about this and not understanding the stress and disappointment and anger that customers will have when they want to do something and they can't do it. And that is what our job is to be there. And of course, with systems...
And that was not just because of perhaps lower volumes, right?
No.
Okay.
We've spent a lot of time building our technology capability in the last couple of years. So we've done a complete rewrite on a whole range of different components. Our matching engine, for instance, comes from NASDAQ. NASDAQ, clearly, we all know who they are. We know the volumes that they run. So we have built and invested in that infrastructure. That might mean that we haven't launched quite as many coins last year as some of the other competitors, but it does mean that when you trade with us, you get the liquidity, there's the business there, there's the right price, and you can trade and engage with us. So that for us is a fundamental, it's a hygiene factor. We have got to be up. We have got to have that availability and ensuring that we've done everything. Now, as with any technology, there may be outages at some stage, but what is important is that you have got that resilience, that infrastructure, that redundancy. So if we lose a data center, it doesn't matter. We flip straight away to the other one. You wouldn't even know about that. If we have got problems in any part of our technology infrastructure, that we have got that capability. And that is using best practice. That is using things and using the very best of things like out of Amazon Web Services in terms of ensuring that we have got that total resilience and thinking differently. And that becomes in highly volatile, therefore very high volume markets, we need to make sure that we are up and available to everybody.
You've already mentioned the importance of regulation of the crypto space. What is the current situation in terms of the policy taking its shape? Should we be taking stories of the money laundering and tax probes at crypto exchanges at face value? How do you suggest we read them? What do you make of the recent avalanche, for example, of legacy systems, narratives, and regulatory crackdown stories from Fed, SEC, IRS, DOJ, Secretary Yellen, etc.? Do you think they are genuinely going into a direction of pay your taxes, comply with laws, don't take shortcuts, and we'll let you innovate and do your business?
I think I'll separate those two things. I'm clearly not going to, and I know you're not asking me to, so thank you, but I'm not going to mention or talk about any particular legal activity that's going on anywhere in the world. That's not what I'm qualified to do, and it's not appropriate to do that. So I want to talk at a high level. I'll talk about taxes in a moment, but at a high level, I think it is easy for some commentators to talk about, oh, this is the place where you could launder money. This is the place where, you know, the legal activity, this funds the dark web, etc. And without a doubt, at some point, many years ago, there was activity within that space. There was also a lot of activity that is using in that in terms of US dollar bills. I think the 500 euro note has a particular connotation in terms of certain circles, etc. So let's not just think that all the bad stuff is done on crypto assets and, you know, all the good stuff is done on paper money and digital money. I think it's, for some commentators, that's been a very easy headline to put out there. I think one of the things, you know, if you look at blockchain, one of the amazing things about it is it actually shows you what happened to that activity on the previous transaction of that. If I give you a 10 euro note, you have no idea where it's come from. You have no idea where it's been, what it's been used for, etc. And so actually you have got a lot more information. So what I think is important is that regulators are understanding this technology, this blockchain technology, understanding what the risks are and what are the controls that are required. The language that I'm really interested in here is, if we've got fiat money here, and we understand, and the regulators understand, well, how do you launder money, how do you do things, etc. And then they look at crypto assets and go, all those problems disappear because we've got the blockchain and we've got that resilience. What is important is that the risks are different, and therefore the controls are different. And if you put the controls that you have around cash over here, it won't work. And likewise, if you put the controls around the crypto asset into cash, it won't work. So we're starting to see some of the regulators globally starting to understand that the risks, there are different risks. Those controls to manage those risks are different. So let us understand that. I'll give you an analogy, which I think is super good. I remember talking to a regulator in 2015 about the cloud. And up until then, every bank had to have a physical data center. And we were explaining what the cloud did and what Amazon and Azure and Google does. Brilliant. The point is, there are no risks. It's not that there are no risks over here and the cloud is such a wonderful thing. It is the risks, there are risks, but they're different risks than a physical data center. So physical data center, you know, can have a fire. It can have water damage. Therefore, I can lose it. The cloud doesn't. But the cloud also means we don't know where exactly where the data center is, and can I go and see it, which is an EBA requirement as an example. So the risks are different. You need to understand those and put the right controls in. And it does take, you know, the industry, and that's regulators and people like us, time to ensure that we understand and can articulate and clearly communicate what those risks are that are different with regard to compliance and money laundering. That, I think, is the important thing. So there's loads of reports that say, crypto assets aren't used as much as cash for, bad things, etc. Fine. We have to look and say, well, who sponsored those? Just the same as when they say cash is the best thing in the world, we have to understand who sponsors that report. The key thing is that if we can make it more difficult for people to do things on a cryptocurrency than they can in traditional finance, they will go to traditional finance to do things. And it is a lazy commentator who will then go, oh, crypto is only for bad people. If we look at taxes, I think this is kind of interesting, but it is at a national level. I don't think it is something that is a global thing. I'm old enough to remember, at least in the UK, when mobile phones had to be plugged into cars because they didn't have batteries, and there were these big blocks, and you had a tax. You had a tax for this new technology, which is the car phone, because they just wanted to raise money. Okay, what are we seeing in crypto? We're seeing, oh, is this an opportunity to raise some tax? And clearly what all governments have done, excuse me, in the last year is they've spent a lot of money and they need to recoup those taxes. So is this an easy way of doing this? Now, whether a particular tax of $10,000 or whatever is not the right thing, that's a national government thing. I don't think it should be seen as a taxation on crypto as a sector. It is a way of raising money that they're doing across a whole range of things. So, I don't know all the taxation rates across everywhere in the world, but I know in the UK, we used to get taxed on dividends. So a company would pay me some dividends, if I had some shares, I'd pay tax on it. Then they realized, God, that's expensive. It's expensive to collect that information. So they now say, you've got an allowance, which most people never go in, which is tax-free. And you only pay if you are really getting a lot of dividends, okay? And I think what you're getting is that maturity. So that took a bit of time where people were just like, oh, I've got £1 coming in from a dividend, I've got to put that into a tax return and pay tax on it, which is just admin. So I think you've got to take a step back and think, at a macro level, what are we talking about? We're talking about the government's need to raise taxes, that they're going to look at a whole range of different things to do. I think taxing on crypto assets is no different than taxing on petrol or cars or employment. It is just another opportunity for them to tax us, and they have to raise that money somehow. If they wanted to stop, and this is where the commentators, again, I think are incorrect. If they wanted to stop crypto assets, tax is not the way to do it. Regulation is the way to do it. Putting controls on opening the accounts, on AML, on KYC, on KYT, that's how you stop it. This is about money raising, not stopping an industry. Tax would be a very inefficient way. We all know globally that if you are taxed a lot, you will stop using that and you will go and find somewhere else. And whether that's a lower tax country or regime or different asset class, you will do that. So I think that is really important. That narrative I haven't heard people talk about, and I think that is important that they do get a clear understanding of the impact on taxation.
Why has still nobody created a standard KYC application which could be plugged anywhere, for example, at crypto platforms, banks, credit cards, etc.? The situation seems kind of chaotic, though it could be standardized.
Yes.
And perhaps based on, I don't know, retina scanners or fingerprint like India. What do you think about this?
If I could find a way of doing it, I would do it and I'd make a fortune. How much, and it's billions that banks and fintechs and crypto exchanges in Europe, not the world, in Europe, billions of euros is being spent on this. The problem we have got is that as a regulated entity, we need to have assurance that you coming on board as one of our customers, you are who you say you are, and we know your source of wealth and funds, things like that. And if we don't do that check right, I go to jail. So the regulation says that I go to jail or I get a fine, my company gets a fine, etc. I cannot rely on somebody else, a third party, to do it, and they go, trust me, it's okay, okay? Because I could trust you, and there is ways of outsourcing this, but it is very, very complicated. But at the end of the day, the responsibility and accountability sits with the leadership, with the people that are in front of the regulators. And so this goes back to the conversation we had earlier, which is what you've got is this problem that the industry is running at one speed and the regulatory side, not regulators, but the regulatory side is running at a different one. So what does the law say? The law says, if you are a regulated company, you need to onboard your customers and do your AML checks. Okay. So until the law changes, then we can't do that. So the problem I think you've got then is, you know, we're regulated in Luxembourg, as I said. If you've then got somebody coming, let's say from Portugal, or someone coming from Germany, how do we ensure that they've done it correctly with the retina eyes, etc.? And the European Union provides some infrastructure which could be used. It's a massive problem. It's a problem that's been spoken about for many, many years in banking. You'll know this, that loads of people have been talking about how they can do it. And even getting, you know, a couple of banks, trusted top tier banks talking together doesn't work. I think the whole process is creating a lot of friction on onboarding and a bad customer experience. And I think it would be, and we would absolutely be fully supportive and love to be involved in conversations that went, how can we make this better? It doesn't help in terms of ensuring the controls are fit for purpose. And I think there are better ways of doing it. Unfortunately, the way that regulation is run, it's on my neck if it goes wrong. So we can't do anything apart from being super compliant. I think also that it would need to be a pan financial services initiative. It can't be crypto exchanges. This has got nothing to do with crypto. It is financial services. And how do we do that better?
The user experience of sending and storing cryptocurrencies is still pretty horrendous, talking frankly. When can we expect some meaningful ease of use? When will, for example, an average person be able to trust an exchange to have a reliable partner in, not in terms of security against criminal activities, but simply in protecting him or her getting into very costly mistakes? For example, simply sending Bitcoin over the wrong rails, etc.
Yeah, I think there's been a number of different initiatives across the industry in terms of creating some more resilience in that sending, in terms of insurance, in terms of various other things that have happened. One of the things that I'm very passionate about, and the team are as well, is how do we educate people and how do we communicate to people? What do I mean by that? You, as a user, as an example, use your Visa or your MasterCard to make a purchase and it works. You trust it, the retailer trusts it because you can get your coffee from that. They know they're going to get paid. Your bank trusts it. It just works at effectively a fairly low price. All the bells, whistles, engine room, whatever, however you want to call it, that sits underneath that transaction, you don't know about. You don't care. We in the industry, I think, have I was going to say we're guilty. I think it's probably a guilty pleasure, which is we like talking about mining and hash rates and all these things. You know, what's a custodian? Why do we call it a vault or a safe? Because I know what a safe is. It's one of those things you open it up and oh, there's the money. Great. I know what a safe is. I don't know what a custodian is. That seems a big, complicated word. And I think what we've got to do, and one of the things we're trying to do is think about what language we should be talking about, that we don't have to get excited about some of the innate technicalities of the industry that we're more passionate about, but how do we make this really simple? And if you go back to your Visa or MasterCard, that's the simplicity. I want to buy something, it's safe. I want to send something, it's safe. It's done in an interesting way. One of the things that I think, if you look at traditional bank-to-bank payments that the industries are looking at on SEPA and faster payments, things like that, is ensuring that people are not being compromised in terms of how they are sending just fiat money. So I think we have, when you mentioned about sending Bitcoin, it's, yes, we need to get that right. We need to get the user experience better, but we also need to understand, well, are there other actors in the process that might in fact impact whether that is successful? We need to do a better job. I'm using the word we. I think Bitstamp has a huge role here, but I think also some of our colleagues in other exchanges have a role to say, how can we make this simple? Because that's the only way we're going to get into that mass market, if we make it simple. So people have heard about Bitcoin, don't understand the rest, and all of a sudden get this complexity. And I think that's a shame.
You've mentioned your fintech background earlier on. Am I right assuming that you envision Bitstamp in, for example, 5 years, more like an ecosystem of multiple functionalities, aggregating upstream and downstream businesses? It seems like everything is up for grabs right now. So different layers of related traditional space like stock exchanges, banks, insurance companies, combined on the new technology space like brokerage services, money services, staking services, earning interest, loans, savings, integrating bot trading. But what is your strategy? Are you already building any partnerships? Like, for example, Liquid is partnering with Celsius Network with earning interest, for example.
So I'm not going to be drawn into exactly what our strategy is, and I say we're working on that right now. I think what is important, if I take if I look at it sort of a step back, I think there's two parts. One is what do we mean by fintech, and I'll come back to that because I think that's super important. But the other point is that I think there are a lot of opportunities. What we've got to look at is where do we want to play and where should we play? Where does our capability, technology, people, product market fit, etc., fit within that? I think we're going to see a lot of people racing all over the place and not having a coherent strategy about what they're here to do as a business and where do they want to go in the future. I think one of the challenges, again, at an industry level is we go, oh, well, we can do DeFi and we can do spending and we do lending and we can do some earn and we do this. It's like, okay, we mentioned earlier, Visa, MasterCard works pretty well. It's not a broken process. Yes, international remittance payments are expensive and doesn't work as well. So where do we get these use cases where we understand that something that our technology can absolutely help you with, we should be spending our time. What we're not going to do is just go, well, we're going to do 100 things poorly. I want to do a few things really, really well that actually have that product market fit, that we're very clear on what we're doing. If we talk about what I think a fintech means, at a simplistic level, it's about having fin and it's about tech. And we've all seen where we've got great fin companies, traditional banks, low tech. And we've also seen great tech companies who actually don't understand how financial services work. So the best fintechs are having enough people who understand financial control, compliance, risk, etc., and enough of the excitement in terms of technology and product, etc. And those are the very, very best fintechs. It's also about the agility, so being able to make decisions quickly, being able to know what product market fit is and how to measure them, how to get to that point really quickly. And it's about having an open, transparent communication within the company so people understand what and how where we are going. So fintech is more of a mindset than anything else. A fintech can be a bank, it cannot be a bank, it could be an exchange, it doesn't have to be exchanges. For me, it's about executing and delivering our products to our customers in a very robust, clear, compliant way, but also quick.
To what extent do you want your business model to be centralized or decentralized in the future? How is DeFi space growth and development affecting your business?
Yeah, I think DeFi is really interesting, and I think if you unpack it, it's a very interesting piece of technology. Okay, so first of all, it's a technology play. Secondly, what you've got is you've got two ecosystems. You've got the DeFi and you've got the centralized crypto exchanges. what is important is that is relatively small. It's creating a lot of noise, but it's relatively small. However, regulators are not looking at that. As soon as, going back to what we talked about earlier, as soon as regulators start seeing this is getting bigger, they will start trying to understand where the source of funds, source of wealth, AML checks are going to come. So regulators will start looking at what that will mean is this world will come closer to the traditional financial services and the crypto exchanges like Bitstamp. So first of all, they will move. We won't move towards them. They will move into there. And so the arbitrage between what you can earn in traditional financial services and in DeFi will narrow down as some of the costs in doing financial services born on there. So for us at Bitstamp, what we see is this is a huge opportunity to be the bridge or the gateway between traditional financial services, fiat, and the DeFi world, where you want to be able to use some of the exciting technology that's there, which is the point I was making earlier, which is it's a great piece of tech, and ensuring that that actually does things better. And so things like supply chain finance, remittance payments, things that are complicated, that are going cross borders, that can be triggered by smart contracts, become super interesting, I think, and therefore solve real problems. If we can solve real problems in industry, we will increase adoption. So I think where our view is that we want to be a bridge or the gateway into that DeFi world, with that providing that wrapper that says we are compliant, okay, and then you can use people in there for those DeFi, smart contracts, lending, or whatever. And again, I think it's that mindset which is super interesting. So I don't think it's a DeFi versus centralized debate. I think it's about how they work together. And I think we've got things that are unique and wanted by that community.
Are you going to support layer 2 solutions?
We don't tend to pre-announce our roadmap of assets, etc. Very happy to engage at the appropriate time on these things in due course. I think for us, it goes back to the two things that I've mentioned. One is quality, and the second one is what is the use case? What's the product market fit? So why do people want this? Why do our customers want some more technology? How does it help them? How does it help them engage in crypto assets? And that becomes really, really important. I think the other piece that I am very excited about is working with organizations where we can look and see how we can use crypto assets to help them do things differently. Rather than saying, I want to buy some Bitcoin, it's like, how do I do this on e-gaming? How do I do this in music? How do I do this to facilitate micropayments, remittance payments, etc.? Of which the people said, I don't care if it's Bitcoin or another. It is, I'm trying to do something. At the moment, it has a high degree of friction and therefore a high degree of cost. How can I do this quicker, better, cheaper? And helping companies do that. That, I think, creates a whole new ecosystem of people who are engaged, again, in our technology, but not necessarily thinking that they've just bought a digital asset.
Would tokenizing assets and trading with them ever interest Bitstamp?
I think that is a direction of travel that I think is super interesting. I think we've got a war game out. What does that look like? Where do we play a role within that? There's a lot of noise about NFTs, but we're still very early on that journey. And I think when you look at tokenization of other things, what is the right process for that? So is that less about trading and more around ownership and sort of the custodianship of those things and proof of ownership, as opposed to being able to trade? And you look at sort of housing and things like that, and you just go, there are some really interesting companies that are using blockchain for the housing process, which we know is a difficult and archaic system. To actually using that technology. That doesn't necessarily mean that your house can be sold on an exchange like Bitstamp. It may be, here is some token assets, where do we store them? And therefore that would be a natural role for us to play within that.
What do you make of stablecoins and Tether portfolio transparency issues?
Yeah, I think Tether has I spent a lot of time, and I know they've spent a lot of money ensuring that they are more transparent. And I think the whole industry welcomes that. I think that is really, really good. And I think what we're seeing in terms of stablecoins is it's another use case for the technology of blockchain. We think that taking out the volatility in certain use cases is really interesting. So I mentioned earlier remittance payments. So if you're trying to send money to your family in another part of the world, how do you get that money? Would you do it on blockchain? Well, if you did it this week, it would be fundamentally different than you did it last week. So what does that, how does that compute? That's where stablecoin comes in. Okay, so what we are very guilty of as an industry is comparing everything as equals, and they're not equals. The successful digital assets will be the ones that have a use case that is, it still could be investment, it still could be trading, but it could also be utility. And what is that utility? Is that e-gaming, as we talked about, is that remittance processing and payments. So for me, yes, stablecoin is really interesting and exciting. I think the use cases haven't yet been fully developed. That then provides us a great opportunity to work with some of these innovative startups and companies with some great ideas, which is how can we help solve a problem. But for me, this is all about solving customers' problems. And that's what we have to be here and live for, because if we can solve it, we'll get adoption happening.
Some people still have some doubts about Tether. You can hear complaints like, oh, they have just published their portfolio and it shows that they have only 2% of cash backing up the stablecoin. Do you think we should really be worried about such situations?
I think I haven't seen that particular article, so I don't recognize that statistic. I think what I take a lot. You
probably recognize the concerns, right?
Absolutely, and I think the concern has been has had potential validity, historically. I think you've got to take a lot of comfort with what Tether has done in New York, and the agreements that have come out of there would demonstrate that people much smarter than me have realized that this is good. And I think what they do have is they hold a whole range of cash and near cash assets, just like any bank does. They probably need to be communicating probably better in terms of, well, what does this mean? Your bank doesn't have your salary in cash, it has it in a whole range of different things, but they know what they need as pure cash, and they know what they can invest in a short, medium term with government bonds, etc. So I think we've got to take a lot of comfort from what the Attorney General in New York has been doing with Tether, what Tether is doing, their transparency. I think they've just published their open results that have been done by an external auditor, etc. This is good. This is all about ensuring that we can get trust into that product, we get trust in the crypto world. And for us, we don't want to see anybody fail, but this does go back to something that's passionate about in Bitstamp, which is we're not going to chase every single coin or asset just because other people are doing it. We're doing it for the right reasons. And as and when we get the right comfort, the right liquidity, the right product market fit, customer demand, we will go into these assets. And in the last 4 weeks, we've launched 4 or 6 new assets. That is because they're the right assets to launch right now.
What is your view on central banks' stance against stablecoins and central banks' future influence in the crypto space via CBDCs?
So I think one of the challenges you've got with stablecoins is it takes the control of money supply and of their currency outside of the jurisdiction of the central bank. And I think the US have had this concern for a long time in terms of the US dollar is the majority of US dollars are not actually in the US anymore. They're used as a global currency. So putting the US to one side, if you look at the euro, then there'll be the vast majority, no idea what the percentage is, but it's probably 99 point something, isn't it? Which is within the European Union. Okay, so therefore the European Central Bank can control money supply. Local governments can look at taxation and controls. They can manage that as inflation. As soon as you have a stable coin that is a cross-border outside of the jurisdiction, then it means that the central bank and the government cannot control the economy in the same way they could. My view is it goes back to some things we talked about earlier, which is that's not necessarily a bad thing. It's just a different thing, which means they need to think about how they control money supply and inflation, etc., in a slightly different way. So the levers they had last time are different than the levers they've got this time. We need, and they need to understand that, including if you look at central banks and their digital currencies. I think there's two parts to this. One is it's a piece of technology. Okay, so therefore they should do it. There shouldn't be a huge debate about it. What it does do is it changes some of the dynamics. And I'll talk about the UK market, if I may, because I'm very familiar with that. I don't want to quote the European one. But if you want to deposit your money overnight at the central bank, at the Bank of England, then you have to be a bank. You can't be anything but a bank. You can't be an e-money. You can't be a payment institution, etc. And therefore, the club, I call it a club, is relatively small, and everybody knows, and it's all managed. If you have central bank digital currencies, you're starting to say, well, why is that a bank? Can't it be a bit bigger? Can we then change that? And if you look at some of the things that faster payments in the UK is doing, and where SEPA and SEPA Instant is going in Europe, what you're seeing is other institutions that weren't traditional payments institutions are now getting access to SEPA and faster payments and global instant payments, because that helps on their customer experience. And so what you're starting to open is some of that club, and I use that word carefully, but that club of people who all used to work together, and have probably worked together for 40, 50 years, are now going, there's all these new people here, and they've got some better tech, and they've got some more customer experience. So I think it's about change, it's evolution. At the end of the day, this is a piece of tech. I think what is really amazing, brilliant, is that the validation that this technology is right is being endorsed by the central banks, it's being endorsed by regulators, it's endorsed by institutions and by consumers. That is amazing. Therefore, the tech is right. What we've got to do is work with people who've got interesting, innovative ideas about what they can use with that tech to help customers, to help institutions, and to help to grow the economy.
How early is the crypto space in its life cycle, in your view? Doesn't it look like a massive VC market to you as well?
I think there's certainly a buzz. I can see that there's going to be, if you look at the exchange market, we fully accept that some of the smaller players, some of the regional players will not be in the long term. I think those that are not regulated, I think there will be this, as I said earlier, this flight into the stronger exchanges that have got liquidity, have got that security. And I think we're seeing that happening more and more. If you look at quarter by quarter over the last year, you see that happening. There is an excitement, without a doubt. There's obviously a lot of VC and PE kind of interest. There's a lot of interest in institutions. So there will be some sort of consolidation in terms of where that is. And some of this also is about the economies of scale. As a huge European-based exchange, we see an awful lot of volume. That means that we give our customers the best price. That becomes an island or a moat for us to live and say, well, actually, this is where you should work with. So I think there's going to be a lot of excitement, a lot of interesting use cases for this technology, and now it's going to be about, well, who are the winners out there?
What will the network effects look like going forward?
I think there's probably 2 or 3 different network effects that could occur. And I use the word could on purpose here. So I think there is one which is, if we get institutions and we get consumers, they come into the exchange and, we get the right price and everything else. Then there's the network effect where if they're there, what other services and capabilities can we sell outside of that pure exchange? And, we have things like staking and custody and things like that, which is interesting. I think the other network effect is working with some of our partners in terms of that fintech, in terms of if you've got a distribution to customers in a trusted way and they want to use crypto as part of their asset class, then how and where do they work? So if you've got your pensions, or you've got a savings pot and you want to put 5% into crypto, you want to do that in the one application, the one portal, to be able to look at all your investments in stocks, shares, cash, and crypto. And again, it's helping people doing that. So for me, that's a network effect that we spin our capability out into those ecosystems. I think I'm not yet convinced that becoming an all-purpose bank, starting as a crypto exchange and going into all-purpose banking, is the right answer, because I think having started a bank, there's a huge degree of complexity. There's a huge capital requirement. There's a huge amount of trust that is embedded in all your products and services, payments, lending, savings, etc. That I think that is a big ask. But I think what's important is you've got to look at the global aspect of this, that apart from a very few massive banks that have been around for hundreds of years or 100 years, actually we are a global product. We need to be operating in a global landscape against global regulations. If we started a bank in Slovenia, great, but that would only serve us for Europe. We would then need to determine, what do we do in Switzerland? What do we do in the UK? What do we do in America? In America, we have 50 states. Which ones do we go to? And so you see, if you go down that, let's try and be all things to all people, I think you'll spend a lot of money, a huge amount of money, but you will lose that focus. And our focus is that crypto exchange, financial services, really nice sweet spot for us.
How bullish are you on Bitcoin as the first money created specifically for internet? Of course, being the CEO of a major crypto exchange, you're presumably not among those who believe Bitcoin remains the only coin long-term, right? So any other coins on your radar long-term?
Yeah, I mean, I think there's probably 3 or 4 things I want to say on this point. I think what you're seeing in Bitcoin here is, over time, I think you are going to see different use cases for why Bitcoin is of interest. So clearly, when there's high volatility, people want to trade. When there is stability, people want to save as a long-term investment product. And I think because of the unique construct of Bitcoin, what you're going to see is over its lifetime, and I'm talking decades, I think the use cases will change, that people will look at things, okay? And we've seen some of the volatility recently. We've also seen where we've had price stability, and we've seen different behaviors of people doing that. So I think all of these go into, what is the use case? What is the reason for doing this? And we talked about stable coins earlier. That has a certain use case. That is super important. I don't want volatility if I just want to send you some money. Yeah. If I'm going to trade, what am I trading? What is the asset? What is it based on? And where do I go with that? If I want to do a utility because it just helps me do something in my life better, then I'm going to need to have that. So what I think is interesting is, Bitcoin is the dominant one. Great. Ethereum is, particularly with DeFi and smart contracts, is just expanding at, exponential rate. There's a lot of other coins that are really interesting. What we want to do is to bring those on in the way that I've mentioned, but it is ensuring that we are providing that product market fit. So which ones are really helping customers to doing things differently in their lives, or from an institutional perspective, and that becomes important. I guess it's a little bit of a shame that Bitcoin is the dominant story. I think what we are seeing is less and less dominance by Bitcoin over some of the other assets. I think that is super helpful. You wouldn't want a stock exchange just to have one big stock and then a bunch of little ones. You want a healthy stock of different things that do different behaviors for different use cases.
We have covered a lot of ground. So much more remains untouched.
Okay.
Would you possibly share any final thoughts with our audience?
I think the excitement, which hopefully I've managed to share today, is really that this is the start of the beginning. We've spent the last 10 years building infrastructure, getting our market share within Bitstamp, and ensuring we've got the best team. But not only about Bitstamp. If you look at the industry, this is the beginning. This is the part where you go, this is an aspect of financial services. This is what I am involved in. This is what I use. And then the amazing thing will be, oh, I've just done something, but I didn't realize that was a crypto asset I did it under. That becomes good. Yeah. If I can transfer some money, if I can be engaged on gaming, or I can do something in music or in film or something, which is like, I've just done something. Oh, is that crypto? That is good. That's the use cases that are passionate, and welcome conversations with your readers and watchers in terms of, yeah, just great ideas. We love them. If we can work with people, that would be fantastic.
Mr. Sawyer, thanks so much for your time and this great talk. Hope we can do this again sometime in the future.
I hope so.
Yeah, thank you so much, and bye-bye.
Thank you for your time today. I appreciate it. Thank you. You take care.
Thanks. Bye.
Bye-bye.